Welcome to the Deep Dive, your express lane, to really getting under the hood of something fascinating.
Glad to be here.
Today, we're cutting straight to it. We're doing a deep dive into the Q1 FY26 financial results for Procter & Gamble Health Limited.
Yep, we've got the official press release, and we've also got the detailed, unaudited financial statement right here.
And this isn't just going to be about the numbers themselves. We really want to uncover the story, the why behind these figures.
Exactly. Our vision, really, is to pull out the most important bits of knowledge, the key insights from these documents.
So by the end of this, you should feel pretty well informed about how P&G Health has been doing lately.
And hopefully you'll pick up some tips on how to, look at these kinds of reports with a more critical eye yourself.
Okay, so to get you interested right away, P&G Health has just announced some, well, pretty impressive results for the quarter ending June 30, 2025. We're talking sales up a solid 20%. And the profit after tax, it saw this really eye-opening jump. So what's the main headline here?
Well, the headline is definitely strong. The company reported sales of 333 crores for that quarter.
Okay, 333 crores.
Which is, like you said, a solid 20% increase compared to the same time last year.
And that growth came from everywhere.
Pretty much, yeah. What's encouraging is it seems broad-based. It spans both their domestic business and their exports, too.
A 20% sales jump is, definitely something to be happy about. But here's what really grabbed my attention.
Go on.
The profit after tax, the PAT, it soared to 66 crores this quarter.
Right.
Compare that to just 17 crores a year ago. That's a huge leap.
It absolutely is.
So it makes you wonder, right, how did they manage such a, dramatic profit increase in just 12 months?
Okay, so this is where we need to connect a few dots. It's where you get that aha moment that you might miss if you just, scan the headlines.
Right.
So strong sales growth, that was definitely a key driver, no doubt. But that huge jump in PEAT was also significantly influenced by something called a one-time impact of impairment in the base period.
A one-time impact of impairment. Okay, that sounds technical, but also it's absolutely critical to understanding the real picture here.
It really is.
Can you break that down for us? What does that actually mean?
Of course. So if you look into the financial notes, they give the specifics. During the quarter ended June 30th, 2024, that's the period we're comparing against, the base period.
Okay.
The company recorded what they call an exceptional item, and it was 2019 lax.
2019 lax, that's quite specific. What was it for?
It basically stemmed from their decision to stop producing injections at their Goa manufacturing plant. That was effective September 30th, 2023.
Ah, okay. So they changed how they were making injections.
Exactly. They shifted strategy. They decided to start sourcing injections from a contract manufacturer instead of making them in-house.
So they outsourced it.
Yeah.
How does that decision lead to such a big, exceptional item that hits the profit members so hard last year?
Well, a few things happened. They sold off some of the plant assets, which brought in about 790 lakhs. But then they had to impair the remaining book value of those assets, which was 627 lakhs.
Impair means write down the value.
Essentially, yes. Recognize that the carrying value on the books was higher than its recoverable amount. And on top of that, they also had to impair other related assets, specifically capital work that was in progress by another 1,392 lakhs.
Wow. Okay, so add all that up.
And you get that 2019 lakh exceptional item, that charge they took in the prior year.
Right.
So the really crucial point here is this. That significant one-time expense last year, it artificially lowered the profit reported for that period.
I see.
Which in turn makes this year's profit growth look much, much bigger by comparison than maybe the underlying operational improvement alone would suggest.
That makes perfect sense.
Yeah.
Without knowing that, you could easily misinterpret just how much of this year's profit jump is from ongoing business improvements versus just not having that big one-off cost from last year.
Precisely. It's a really important piece of context.
It's like if you had a huge roof repair bill one year, the next year your savings look amazing, even your income only went up slightly, just because you didn't have that massive expense again.
That's a great analogy, actually.
So knowing that context now, what is management saying about this strong start to their financial year, looking beyond just that comparison effect?
Well, Mr. Mullen, he's the managing director for P&G Health India, he sounded quite pleased.
Understandably.
He mentioned the continued momentum and called it a strong start to the financial year 2025-26. He emphasized that these results show they're meeting the, evolving needs of consumers and healthcare professionals.
And did he point to anything specific driving that momentum?
Yeah, he mentioned superior brand building, go-to-market initiatives, and also improving their supply chain capabilities as being key drivers.
Okay, so it sounds like there's a clear strategy behind these numbers. He mentions strategic pillars, I think. What exactly are those?
Right. He laid out their strategy. It centers on having a focused portfolio of brands that are high quality, trusted, and highly recommended brands where performance really drives people's choice.
Performance drives choice. Okay.
And this is tied to a deep commitment to what they call superiority across everything.
Everything.
Like the product itself, the packaging it comes in, the brand communication, how it shows up in stores, the retail execution, and of course, the overall value it offers.
That sounds comprehensive. Anything else?
Yeah, he also talked about aiming for constructive disruption, whatever that means in practice, and building an agile, accountable organization. And underpinning all of this, he said, is a drive for continuous engagement with consumers and healthcare professionals, using innovation that's backed by science.
So for you listening, this isn't just about, say, one good quarter. It sounds like P&G Health is focused on building for the long term, making sure the products you might pick up are consistently good and have that scientific basis.
That seems to be the message, yes.
Speaking of products, maybe just remind us quickly about P&G Health Limited itself in the bigger picture.
Sure. So Procter & Gamble Health Limited, they position themselves as one of India's largest companies in the vitamins, minerals, and supplements market, the VMS market.
VMS, right.
Their focus is on making and marketing products that help people live healthier lifestyles, improve their quality of life. And you probably know a lot of their brands. Well, names like Neurobion, Livogen, 7Cs, Evian, Pelubian, Nasivian, too. These are really well-established names.
Yeah, definitely recognize those.
And they're crucial for P&G Health's leadership in that VMS space, especially as they keep talking about superiority and building trust.
And they're part of that huge global P&G group, aren't they?
That's right. P&G Health Limited operates under the umbrella of the main Procter & Gamble parent company.
Which is massive.
Oh, yeah. P&G is a global consumer goods giant. They operate in something like 70 countries worldwide. They've got this incredibly diverse portfolio of household names. Ambipur, Ariel, Gillette, Pampers, Tide, Vixie, you name it.
Right. So it gives you a sense of the scale, the corporate family behind these health products we're talking about.
Exactly.
Okay, let's maybe pivot back to some of those finer operational and financial details. They often contain really crucial context. I noticed something interesting about their financial year timing.
Yes, that's actually a really important detail for putting these results in the right context. They changed their financial year end.
Okay.
It used to end on June 30th. Now it ends on March 31st.
So what does that mean for the recent reporting periods?
Well, it means the previous financial year, which they called FY 2024-25, was actually only a 9-month period. It ran from July 1st, 2024 to March 31st, 2025.
A short year. Okay.
Exactly. So the quarter we're discussing now, the one ending June 30, 2025, is actually the first quarter of their new financial year, FY26.
Got it. So Q1 FY26. Good to know. That's a vital piece of the puzzle for comparisons.
Absolutely. It resets the clock in a way.
And, okay, beyond the headline sales and profit figures we discussed, how did some of the other financial metrics look for this first quarter of FY26?
Well, their total income for Q1 FY26 came in at 34,277 lakhs. That's a noticeable jump from 28,601 lakhs in Q1 of FY25.
Okay, income up nicely. What about costs?
Total expenses did also go up. They were 25,396 lakhs compared to 24,299 lakhs a year ago.
So expenses rose, but income rose more.
Significantly more, yes. What's interesting isn't just that income is up, but the expense growth is lagging quite a bit behind the revenue growth.
Which suggests?
It's just improved operational efficiency. You know, they're generating more sales without needing a proportional increase in their costs. That's generally a very healthy sign for profitability, even if you factor out that one-time impairment effect we talked about.
Right, and earnings per share, EPS.
Yeah, if you look at earnings per equity share, both basic and diluted, after considering exceptional items, it was 39 rupees 87 paise for Q1 FY26.
And last year?
A massive difference. It was only 10 rupees 11 paise in Q1 FY25. Again, that just hammers home the huge impact of that exceptional item from last year on the year-over-year EPS comparison.
Definitely paints a stark picture. And from a reporting angle, it looks like they simplified how they present their business segments.
Yes, they did. For segment reporting purposes, they've now identified pharmaceuticals as their single primary reportable segment.
So basically consolidating everything under that one main heading.
Seems like it streamlines how they present their results, makes it a bit clearer, maybe.
Okay. And finally, for anyone looking at these reports, especially since they're marked unaudited, how can we be confident in these numbers? Is there any external check?
Good question. So these unaudited financial results were thoroughly reviewed by the company's audit committee first.
Okay, internal check.
Then they were formally approved by the board of directors on August 1st, 2025. But importantly, yes, there's an external check, too.
Which is?
Their statutory auditors, the firm Harry Bhakti & Co., LLP, they performed what's called a limited review of these results.
A limited review. What did they conclude?
Crucially, they express an unmodified conclusion.
Unmodified means?
It essentially means the auditors didn't find anything that made them believe the financial statements contained any material misstatements. It adds a solid layer of credibility to the figures they've reported, even though it's not a full audit.
Okay, that's reassuring. So let's try and bring this deep dive to a neat conclusion then.
Sounds good.
Procter & Gamble Health Limited put up a very strong performance in Q1 of their new financial year, FY26. Solid sales growth, broad-based too.
Yeah, that 20% jump was significant.
And a really notable profit increase, hitting 66 cores. But as we've spent a good bit of time unpacking, the crucial context is that big one-time impairment charge they took in the prior year. That really helps explain the magnitude of that impressive profit surge we saw this time around.
Exactly. Understanding those kinds of specific one-time factors is just fundamental if you want to interpret financial results accurately and see that, the true operational picture underneath.
Which leads us nicely to a final thought for you, our listener, to maybe chew on after this deep dive. How does understanding these specific, sometimes hidden one-time factors like that impairment charge we discussed today, how does that change the way you might interpret news headlines about company earnings, or how you assess a company's real operational momentum?
That's a great question. It encourages that deeper look.
We really encourage you to apply that kind of critical thinking whenever you encounter financial information. Because, well, often the real story isn't in the headline, it's tucked away in the footnotes.